Regulatory authority and the aftermath of demonetisation have been painful for real estate developers, but for private equity players interested in the Indian real estate space, they're a godsend. CNBC TV 18's Kevin Lee tells you why.
$6 billion. That's the amount of private equity money that came into Indian real estate in 2016, and it's the highest in 9 years. In contrast, 2017 has seen a slow start where these investments are concerned, but that could change soon. Two reasons: demonetisation and the advent of the Real Estate Regulatory Authority. Both moves, experts say, will mean more transparency in the sector, and that's exactly what investors are looking for.
Overseas investors are very discerning, and they need safety, transparency, and an understanding that they're buying into something that is stable. So I believe all of the moves that your government has made, particularly in the last couple of years, and now there seems to be a suggestion of stability in your political administration here, I believe all those things are ingredients that overseas investors will find attractive.
For institutional investors, transparency is a very, very important factor, and we always do as JLL our transparency index, and India has moved up over the last couple of years quite significantly and sits now in the mid-30 position out of more than 100 countries. So it is moving into the right direction, and that is even before that regulation is coming into play, so we will see further improvement going forward.
Never mind that the period following demonetisation saw a 40% drop in residential sales, and that developers are waiting to see the regulator begin work before seriously committing to new projects. It's not just residential projects that could soon get a leg up in terms of PE investments. Property consultant Cushman & Wakefield estimates that office space could be set for a bumper year with as much as $3.5 billion of private equity money flowing in. That's a 400% jump from 2016 levels, but only if real estate investment trusts pick up in a big way.
Real estate investment trusts are a pretty ideal tool to get into a market. If you want to have exposure to the Indian real estate market at the moment, that is pretty difficult. Either you buy a building, then you have kind of all your eggs in one basket, or you have to participate in whatever type of fund structure, which is not really available for everybody. Whereas with a REIT, you can invest in relatively small amounts into that market and participate.
Experts add that REITs may not remain a dormant investment opportunity much longer, especially given the policy changes the government and various regulators are working on. And once the new regulator gets cracking, foreign investor confidence will only get stronger. In Mumbai, Kevin Lee.